tough period, but it looks like this is just representative of what we're seeing across the broader construction sector at this stage.
That's correct, Stephen. I think we've been in difficult times for the last 2 years. I do believe that we anticipated an improvement of some sorts in the second half of last calendar year to December, the results under review, but certainly extremely difficult times in terms of the consumer and the free spend of the average consumer in this country.
Do you rely on the consumer for your numbers?
We do. Our business is very much based on refurbishment and upgrade, both in the municipal civil space as well as in the residential spend in terms of refurbishment and upgrade, as well as obviously new spend. Now the new spend side of it, I think in res and certainly in non-res, is starting to show its small signs of improvement. I'm talking in building plans passed, but it's the building plans completed that was really the issue in the period under review to December.
And you mentioned the past 2 years have been tough. You mentioned in the commentary today that the past 6 months, the ones we're talking about today, were particularly tough. Why do you think we're seeing it deteriorating at that stage?
I do believe it's the building plans completed cycle. All the problems in terms of the changes in the market with the lack of spend in res, etc. Bearing in mind that the setup of plans, the approval, the funding, there's normally about an 8 to 12 month cycle involved. So you're actually bearing the brunt of the building plans completed in the period, largely, I would say, in the 6 months to December.
But you do say there is light at the end of the tunnel. You are starting to see a turn there.
We certainly, our factories at this time, for example, our Cobra tap factory is at an all-time high in terms of order bank at the moment. We're also seeing similar in some of our other companies. Even the company that stressed us was the civil municipal company DPI in Inkledon, infrastructure cluster. Those companies at this time are starting to build some form of order books. The big issue is how will it hold up? And that's what we're watching at this time.
You mentioned Cobra, that falls under the building cluster. You've been gaining market share there. Have you been doing it at the expense of margin though?
There has been a change in the margin, but that's more to do with the change in the purchase of product. The upmarket type products, there's been a cooling off and people are definitely tending to buy down, which is Cobra supports those purchases as well, but also in our Iska company, which is actually in the mid to lower type priced items.
Okay, so you're selling typically lower margin products in that case?
At this point in time, yes.
I mean, how have you managed these market share gains within companies like Cobra though?
I think the fundamental of it is that the pie has obviously shrunk quite dramatically. So we've been able to, obviously being a local producer and supplier, have been able to actually make sure that our levels of stock are at the right and appropriate levels for the demands at that time. Now, most of the importers have, and I'm not saying all of them, but most of them have had long lines of supply. They've had a shortage of credit funding available. So it has been a disrupted supply chain for these competitors. Also, we've developed new products in all of our companies through this period. So we've attempted to make sure that those sales that are available are actually ones that we are going to attract.
How about the strong rand? Does that pit you against cheaper imports? And also, how does it affect operations outside of South Africa?
Obviously, the local operations, the strong rand gives the importers benefit. Fundamentally, though, the brands that we have got are solid brands. They're well renowned, they're specified, so we continue to pick up a fair amount of business. There is some pricing issues, maybe on the middle range, but certainly our companies have addressed those products and I believe we're okay there. As far as the African context is concerned, in local currencies within those African markets, definitely they have depreciated against the strong rand, which has actually impacted on the operating results of those businesses.
Derek, just quickly, we're running out of time. Take us through some of the remedial action that you have taken due to the circumstances you face at the moment and how that perhaps places you going forward.
I think we've approached the group on an efficiency basis with current demands and current volumes. We've certainly taken out a lot of people over the last period of time, over the last 2 years, and we've driven hard to products, new products, territory management, and man management within our structures. Factories, we've definitely lowered cost and made sure that we are as efficient as we can be.
So hopefully this 2-year negative period is about to turn and we'll have better news in 6 months' time.
We're certainly hoping so.